Throughout the week, what do we know about the 3-day setups? There's the 3-day longs, there's the 3-day shorts, there's first red days, which usually come in a 3-day setup where you'll have a pump day, and then you'll have a first red day, and then you'll have the trade. So it comes in different varieties. And if you don't get specific, you're going to get confused. But just following me and looking at this, let's follow this. And let's look for 3-day setups. So let's say we start off this week. I already know we're going lower. It's evident. We're very bearish market structure. This is the 200 EMA. We're very much under that bearish market structure. But anyways, I know that in order for me to establish whether we have a 3-day setup is the day one, no matter what 3-day setup you're looking for, is always going to be a pump day. And it's going to be a clear pump, very clear. Look at this low. And then look at this low. This is Monday, right? So I never trade Mondays. I always wait. I don't trade Mondays. But we pull back after beating this low. We break out, we pull back, and we continue to trend to the downside. Mind you, the weekly level is right here. We're dumping down, and then we break out of the previous day's low, and then we pump up. I'm just looking for a well-defined pump. It doesn't have to close and break out, but you need to physically see a pump because you need the maybe false break and first red day, and then the next day being the dump. But you need to have a pump first, a pump day, some type of pump. You can't miss it. And I'm going to keep showing you because you can't miss the pump. So this is day one where we have a pump. Now, here's Wednesday. I'm just looking throughout the week. This is if I'm just coming to the charts looking for 3-day setups. Tuesday, we get a false break at the low. I know that Monday's high is up here. I know that by Monday and Tuesday, that it's either the high or the low that's going to be locked in because now I have my initial balance. This is now my high and this is my low for the week. Wednesday opens up. I know that's either going to be a trend day or reversal day. Look where we are as far as the week goes, as far as Monday's high and Monday's low. When we false break the low, this is a lower low, regardless, because it is a lower low. It did false break the low, but that doesn't stop it from being a lower low. So we make a low, we pull back in the inside, and then we close here. So my next thought process is, okay, we're down low. We tried to break out. We pulled back and then we failed. We did go lower, but I know that if I'm going to make a lower low first, we're going to pump first and then dump. Just like every other time it makes a low. If it makes a low, it's going to pump. If it makes a low, it's going to pump. Every single time it makes a low, it will pump first and then dump. This is perfect. And I'm going to show this after. But we make a lower low, we pump. Now I'm in the inside of Monday's range. The thought process is I got Asia high, London low. This is the formation 3-session setup for a dump and pump trade. So you get the dump and pump on Wednesday. Now you're getting at the weekly level. Now I'm at the weekly level. We break out of the weekly level and then we start to coil. Now it's Thursday, range expansion day. Mind you, that this day right here from Wednesday, it's an inside day. It's an inside day. Okay. So I wouldn't necessarily even take this trade until Friday. Why? Because when I have an inside day signal, I want to see previous daily levels being breached. So if it didn't give me an entry here, which it might have, I'm on the hour chart. Let me go to the 15-minute. What day is this? March 26th. I'm going to go to the 3 so I can just get right to entry. Let's go back a little bit. Okay. Nope, this is not it. Farther. Okay. Here we are. Boom. So This is an inside day. Me personally, I don't like taking inside days until it breaches a daily level. But now I know that by looking at this pump and this inside day, and now this dump, now we have broken down in the inside. We now have a lower low. This was a pump. Then we tried to break out. Once we tried to break out, mind you, this is still an inside day. Look at the breakout. We broke structure, false break at the low. Then we pumped up. We pulled back to where we broke structure from Tuesday. This was just a pullback of the lower high that failed. Break of structure retest, and then we continue to the upside. Then we break out again. A lot of the times, breakouts, you'll see trap traders above or below. Above or below. We break out and consolidate, and then we break back in the inside, giving lower lows. So this was technically a trade you could have took. Me personally, though, I don't like taking trades in the inside. That's just a rule that I have, just from experience. But this is still a trade nonetheless because it's coming from the weekly level. And this is you just piecing together market structure and saying, I did have a pump day. We false broke the low from Monday, which was here. We made a higher high in the inside because we broke structure from this lower high. It's broken now. We pull back and retest the break of structure level. We have Asia high, London low, higher high in the inside for a dump and pump from closing price for Wednesday. So I understand why this happened. Now we get to this high again and we break out, but now we're consolidating. Why are we consolidating? And then we start to break back in the inside of where we broke out of, and we start to give lower lows in the inside. Now we're having lower lows in the inside of where we just pumped from. Half Batman on Thursday. I'm learning this one. I never heard of the Batman's pattern, but I'm learning it. It's kind of cool. But yes, lower lows. So I understand why we sold from closing price, as well as the 10 a.m. club, this nice little M pattern that I always tell people to look for a trend trade. So now by the time Thursday closes, I'm waiting, right? Because I'm just sticking to my rules and I'm not trading if I don't breach a previous day level. But now I know we're going lower because now we have broken back outside of Monday's level and basically completed this pattern. So on Friday, I'm just looking for a simple pump and dump. Why? Because look at this low. It has beaten this low. This is now a lower low. I have Asia low, London high, lower low in the inside of this pump. I get to New York. I can clearly see we have a 3-session setup. Asia low, London high, well-defined coil, lower low in the inside. So what am I doing? All I'm doing is I'm on the backside. I need to see retest. I need to see a retest. And I'm entering off of levels, not looking at every single individual candle. Somebody told me that, structure is only a part of it. Structure is everything. Structure is everything. And if you don't understand structure, it's going to be harder for you to spot these because you won't know where a lower low and a higher high is. But if you're following a process and you're saying, okay, Tuesday, I'm waiting for Monday to set my range. I break out of Monday. I try to break out. I do create lower lows. So I know either way, I have to pump first. I false break this day and close back in the inside and break structure on the inside. That does not mean that I have broken higher time frame highs. That just means on the inside, I have broken structure and made a higher high in the inside. Right? But if I'm zoomed out, this is my lower high, external structure When we break back in the inside, that is internal. Why? Because this is my high, this is my low, that's my opening range. I got 1, 2, 3 pushes to the low, and then a nice clean reversal back in the inside for the dump and pump. This closed as an inside day. We break the previous day's low and go lower. Now we're breaking higher time frame lows. Pump and dump, retest trades. The next day opens up. I got 3-day shorts. This is another 3-day setup. 1 breached the low, 2 breached the low. What am I looking for on Monday? If you're trading Mondays, me, I'm not trading Mondays. I like to see a range first. However, if you did trade Monday, you'd be looking for the reversal. And all it is understanding market structure. This was my lower high. Then we break out and then we fail. Oops, wrong line. So we go a little bit lower, pull back, fail the breakout. Now we're back inside. Now we just made a higher high, higher low, higher high. By this time, you should know if we're going up or down now. By the time it fails the low and then makes a higher high and a higher low and then breaks out again, you should automatically know which direction we're going. So if I know that a higher high has started my trade, look at the previous day's low. This is also the weekly level. We have now broken back in the inside and made a higher high. And this is coming from a 3-day short pattern, a 3-day setup. Look what's happening right before the session. I know that I have broken out. This is my high. So just moving this. This is my high. This is my low. This is my breakout level. Look at what price is doing. If I'm going to continue high, who do you think they're going to trap? Buyers or sellers? We go higher and make a higher high. I automatically know I'm going to dump first. I'm going to see some type of sell because that's what price does. On a higher time frame, it's going to dump before it pumps. We know this already. But when I see this, I'm not scared, especially this coming from a level. Yes, this is a trade. This is a nail and bail if you are counter trending. But if you're looking for the real move, they're obviously going to trap sellers below the breakout level. Oops. Sorry, guys. Make it black. Okay. They're going to trap sellers below the breakout level to go higher, higher high, higher high. Every time it makes a higher high, what does it do? Dump before it pumps, dump before it pumps. Or you could be the type of trader to wait. If I know that I'm trapping to shift, this is the shift. That's the shift. Trap and shift. I already know that by this point, we're going higher. That's it. Now let's just keep following this because this is just Monday. This is just Monday. So now we have a high and a low. Monday has set the opening range. We have a high here and we have a low here. It's really best if you really want easy markets, find daily time frames that trend. Find trending markets. Regardless, I have Monday's range now. I know that higher time frame wise, we're going lower. The beginning of the week, we breached the previous week's low. That is a lower low. We pump first. Now look at Tuesday. Tuesday, what do we have? A false break day. False break days are still part of 3-day setups. A lot of people don't know that, but it's actually, Stacy talks about it. False breaks can be a day too. So you have Monday's high. Now look what's happening when we get to Monday's high. Overall, I see this. Oops. We made a high. We pulled back. We went higher. We pulled back. Hence why we got the buy in New York session to go higher. But then we close as a false break day. We try to go higher, but we close as a false break day. Now, just keep that in mind that all this is just high, low, high, low, high, low. Well, not a low, but we false break. But let's get rid of this and let me dissect this. When you're coming on the charts for New York session, please don't make it harder than when it has to be. It's either you see a sell or you see a buy. But if I'm going to buy, I'm going to buy low. Hey, fam from Cape Town. What's up? What's up, ghost lady? I got a higher high. I automatically know I'm going to dump first. I'm on the 3-minute chart. The 3-minute. This looks like this on the 15-minute, guys. That's all this is. So I know it's going to dump first. This is just internal structure that it's making to shift. When you see the pullback, you're going to see a reversal. False break day and fail breakout. Please differentiate. Thank you. No problem. False break day is a day where we're breaking out of a higher low, but then we close back in the inside. That's just a false break. I call it a false break day because it technically is a false break day. If I'm thinking about 3-day setup wise, this would be pump day, this would be false break day, and this would be the trade to go lower. But how I'm thinking about it is just keeping it simple. I'm marking Monday's high and low. We got a pump day for Monday. I see we've clearly pumped. I got a day where we've broken out of a high. We dumped back down. So when we enter New York session, we dump down. But am I doing anything right here? I'm not. Why? Because I know this is my high and that's my low. If you're doing anything in the inside, you're diddling in the middle. You're diddling. If it starts right here, you need to wait till it gets to the low. Once we get to the low, after pulling back, look what we put, a W. We put a W right here. Pin hammers and engulfing candles. This is coming from 10 a.m. club. 10 a.m. club. W, continue back to where the pump started, and then we go higher. We go higher, but then we put in an M pattern. Breakout, pull back, fail, reverse. Look at the breakdown. Now we have a lower low. We have a lower low inside of this pump after we failed at the high. You will always see a fail first and then a breakdown, a lower low. The next day, because I know that we now have false broken Monday's high and created a lower low in the inside. This is a lower low. We pump up. We have Asia setting the high and London setting the low, actually. So this would be the pullback trade, the pullback session trade. But we got lower low. We've already known. Look at this M pattern that's locked in the high. We're under this. Now, when we pulled back here and expanded back up, first of all, we're right at Monday's high. False break, trap, shift. Let me zoom out. Trap, shift. It's enticing traders to go long front side to trap them and shift to the downside. Average SL for metals and indices endpoints, because every good trade that I take, market kicks me first, then goes without me. Well, first we have to analyze what the problem is. Why do you is it like, how much are you risking? Are you on props? But here, right? We got a high locked in by Asia. We go lower in London. We've already known we have a trap and shift at the high. We've literally sold from Monday's high. New York opens up. Again, what's my high and what's my low? This is my high. This is my low, for one, before New York opens up. And this is my high. Mind you, I'm not doing anything yet. Why? Because I see no lower lows. Okay. I already know that I'm on the back side of this move because we just made a lower low and a lower high. And now we're selling back down. But I don't know much information from there. Just me guessing and not seeing it. Once we break this low, now it's a lower low again, only in the inside because we have not breached the previous daily low. Looking out, we are still in the inside of Tuesday's high and Tuesday's low. I know that we have lower lows in the inside. Even here, it's a lower low in the inside. But now look at this. Lower low, we breached the previous day's low. We pump all the way up to the lower high. We sell. Entry number one, lower low again, previous daily low breached. Pump up, coil, dump. This is coming. My levels are still here. This is still the breakout level. Don't think about entering candles. Think about entering the level. The lower lows, just confirm your trade. Lower low. So this day wasn't the best. But this would be a day where you would still execute the same way. The lower low starts the trade pattern. Then you want to see lower lows in the inside. Lower lows. Here, we breach the previous day's low and make a lower low. Look at where we broke out of. Lower low, pump, coil. Coil. I don't know it's a lower low until I break this low. In all honesty. Then I'm getting in at the level. At the level. If I'm not already had a starter entry up here. This is your earlier entry. This is your conservative entry. But regardless, look how choppy this day was. The pattern still remains the same. Lower low starts the trade, pump, coil, dump. Levels, timings, behavior, price. That's what we only look at. Yes. Again, this is just you following the weekly template. We are still in the inside of Monday, but do you notice that as soon as we breach daily low levels, pump and dump. Low level, pump and dump. Here. Look at this 3-day setup. Monday, breached the high. Tuesday, breached the high. This one is an interesting one. Why? Because we really want to see that third day breach the high. That's what's in Stacy's rules. You have to wait for day 3 on 3-day longs to breach the previous day's high. But it just sells from the high of day. So even here, Asia low, London high, consolidation. You're waiting for lower lows on the inside. And look what it retests. Breakout, pullback, trend. You don't even get in because, well, maybe if you're not, me personally, I'm waiting till after 9:30. So I would have gotten in somewhere in here. Somewhere in here. Maybe. Even this one, it's like, this is the 3-minute chart. So it's like, it doesn't really give you much opportunity. But then you breach the previous day's low. You pull back, retest, coil, and dump again after hours. This one, it's either you're getting in here or you're getting in here at the previous daily low. But either way, you don't really have to deal with much drawdown by waiting for the simple criteria. The simple criteria. If I'm looking for 3-day setups, I like to see daily level lows broken for pump and dumps. Here, we pumped on Monday. This is Monday's high. By Monday and Tuesday, you should get your initial balance. Either the high or the low of the week will hold. If I'm in a bearish market, which side do you think I want to hold? I want the high to hold because that's the lower high on a higher time frame. Pump day, inside day with lower lows, we pump back up to the high and false break it. So if I was coming on this day, I would be looking for a 3-day setup this day from the pump day and the inside day. And then the next day, I'm looking for a high to be breached. We're at the high. This London put in the high of day. I know that in order for me to sell this, I need to see some type of low broken because technically it's looking bullish by making higher highs and higher lows. So it's not until we get here that we fail the high, right? Even here, we get a nice little lower low right here, but we finally fail and coil. This is really quick that happens. Not much of a trade here, but you get this nice pump into the high of day. Not only that, but the previous high of day, and then you get the coil and then the dump. So this was 9:30. I would have been literally watching this hit the high, and I would have had to press the button by 9:42. But yes, I might have taken this. I might have taken this. Either way, the next day, what do? We breach a previous day's low. This trade I did take. We breached the previous day's low after trying to pull back to Monday's high, and we end up failing. Breakout, pull back, fail, reverse, false breaks, lower low on the inside, lower low, pump, dump, lower low, pump, dump, all the way. Friday was a banger. We breach a weekly level low again, but this time we're actually starting to go higher. We false break the weekly low by putting in this W pattern on Monday. We start to go higher. We're now on 3-day shorts, so we're looking for buys actually. So we don't really get what we're looking for on New York on Monday. Coming to this day, we break back in the inside of the previous day's range, but we don't break back out. We put in this double bottom, and then we buy an Asia session, coiling at the high. How to avoid these? You can't avoid them. Stop trying to avoid them. You can't avoid them. It's going to happen. You're going to lose. But just to keep it really simple and just always remember to sell high and to buy low. If you literally just mark your swings and you see what's happening when it gets to the extremes, you'd know the story a lot better. Look what happens. I already know that we false broken at the weekly low. This is Monday's low. We pull back in the inside. We actually break structure a little bit here, but then we make this low. Next day, we pull back and then we fail at this low. We fail. Now we break structure again to go higher. Now I have a higher high. Now I have higher lows. Higher high. We're stuck in this range now. By these 1, 2, 3, 4, I know we're in a range. But I do know that these lows are holding and that I breached a high. Tuesday Asia was a banger. Yes. Yes. I wish I would have gotten this one. This was a nice trap and shift. Higher highs, higher lows. Now I know that we've just made another higher high. I mark my high, I mark my low before New York session. This is the box. This is the box. I wait until after 9:30. 9:30 we are here. Am I doing anything? No, because I'm not here, nor am I here. So there's no reason for me to do anything at all. I'm waiting for price to get there. So we make this lower low in the inside of this swing high and swing low. And then we pump all the way up to the high. We try to break out, but we fail. So this was a nice little nail and bail. Mind you, this does not stop it from being a higher high. I know that it just needs to dump first. We start to dump all the way back down to the low. I'm not thinking it's going to go all the way down here. Why? Because we are literally making higher highs. That's not what I want my trade to do. I need my trade to make lower highs and lower lows. Yes, we did make a lower low here and here, but we're not making lower highs. We're not making lower highs. I need lower highs and lower lows too. So, boom, we got a higher high and a higher low. We get to the high. We take this nail and bail trade. You can take it if you want. Then we get back down to the higher low, the low. And then we get a pin hammer and we buy from there. Trap, shift. We actually break this high in the inside. And then we trap and shift coming right off the previous day's high. You just don't get the trade until the gap time. But if you were trading in New York session, the nail and bail trade would have been better. I'm not going to lie. But the real trade came after hours. Nice trade nonetheless. Closing breakout. Again, this day was absolutely horrid. We were making higher highs and higher lows. So the expectation is that this is my low and this is my high. I already know I'm bullish. If you're getting tripped up in candles like these, don't do that. Look at the highs and the lows, and you can be patiently waiting through this. You don't have to analyze everything. I know you want to, but don't do it. Just wait for the levels. It's either you're going to sell high or you're going to buy low. But I have my swing high marked. Then we break out of this high. Now we have another high. Now we make a higher high. This high was created by this low. So I have my low still intact because this is the same low. So, boom. Now I have my high and my low before New York session opens up. We actually put in this little M pattern. We pull back, right? And then we buy. We fake out the high, and then we do this nice little quick nail and bail sale. This isn't, oh no, this is 8:45. Where's 9:30? 9:30 is here, right here. So am I doing anything by the time 9:30 comes? No, I'm not doing anything because we are not at the high or the low. I am waiting for it to get there. Then we go lower, lower, lower. And what do you know? This is 9:48, beginning of a 15-minute rotation, and we've hit the low and created a pin hammer. Now you have to make one decision. It's either buy or sell at that point. You have the pin hammer, you're at the low, you've made the higher high, you dump first. You can take the entry here or you can wait. You can wait. Either way, this wasn't really a good day to trade. Look at the price. It was bad. I didn't like price at all this day. So it tries to break out again, but look, it breaks out, it pulls back, and it fails at the high. And then you usually start to see the breakdown after that. Once it fails at that high, breakout, pull back, fail, reverse. Look what it's retesting. The next day, trap, shift. Q, what are the two EMAs on your chart? I have a 20 EMA and a 200 EMA. It was this cool thing I was looking at for the 200 EMA, right? So I noticed going to the 15-minute time frame, no problem. I noticed something extraordinary about the 200 EMA. Have you noticed that every time it breaks higher time frame structure, it always pulls back to that 200 EMA? It needs to be in an expansion leg, but it always pulls back there. We break it like higher time frame lows, but when we're in an expansion leg, we always pull back to that 200 EMA. Here, we pull back all the way after breaking here. But I was just studying this, right? And I was like, this is interesting. We're breaking lows and then we pull back to the 200 EMA. Look at this. We're breaking lows and then we pull back to the 200 EMA. I was just studying it and I was like, wow, I might want this on my chart. But I thought that was really neat. And I don't know. I don't know if that'll help somebody, but I'm kind of just like playing around with it. Cause I noticed that Stacy, he has like 5 EMAs up there sometimes. Stacy's one of his videos said, if you follow the rules, no need for indicators. It really is no need for indicators. To be honest with you, you can literally just do what I'm telling you to do and break out, pull back the structure part and be completely fine. You don't really need indicators for any strategy if you really think about it. But I will say that indicators help with confluence. It helps you be confident in your trades and it helps you press the button. So it's good starting off, but then you'll come to a realization that it's not needed because all I need to see if I'm looking for a reversal is I need to fail at a high first and then break down and then start to look for sell opportunities. And that's really all I need to understand. And if it doesn't happen, it doesn't happen. And if it does happen, it does happen. But I know for the most part it does. We always fail at a low first before we start to go higher. They said use 50, 200, and 800 and beat the market maker. They show a lot of direction at higher time frames. Bank used the 800. 800? Now I got to put an 800 up here because 800, I've never used that EMA. That's insane. 800 EMA. We about to see it here live, folks. Oops. Whoa. It's the purple one. It's the 800. Whoa. Wait, what's okay? So how do I use? Hold on. Interesting. 800. This is. You might have started something. So wait, what's the EMAs? I know Stacy uses the 20, the 50, the 200, and it's two other ones. He said witchcraft. Not witchcraft. It's like a magnet level, especially for the 1 hour, 4 hour, and daily. I can see, I feel like the higher the EMA, the more because think about it, it's just following higher time frame structure. So when we break out of a higher time frame high, doesn't it make sense for it to pull back to a higher time frame EMA? Ooh, ooh. Sorry, I'm just playing. But it makes sense, right? If I'm going to break out of a higher time frame high, like external structure wise, it makes sense why it would pull back to a higher time frame EMA. Pump and dumps, pump and dumps, pump and dumps, dump and pumps. If I know I breached a level, like a weekly level, closed and breakout on a weekly aspect, then I could be looking for a pump and dump trade the next week. Why? Because I've closed and breakout down. So I'm looking for a pump and dump. We breached the weekly low. So I could be looking for a weekly template. You could look at it like that if you wanted to. Exactly. And you helped me to make great sense of them with your explanations of Stacy's strategy. So, as always, thank you. No problem. No problem. Of course. Honestly, guys, I like that. As far as the EMAs, it makes sense for me to trade it like that because of it. Like if I'm breaking out of a higher time frame low, it really does make sense why I would pull back to a higher time frame EMA. Maybe like a lot of people are using the EMAs wrong. Just a thought. Pen hammers and engulfing candles at levels are super high confluence. Yes, that's always good. For me, all I need is market structure. If I'm coiling above a breakout level and I got 3 levels of rise, it's pretty simple where the market's going by that point. It's going down. You've got lower lows in the inside of this pump. It's going down. Just like how it went down again from a lower low, from a retest. It's the same thing. Breakouts, pull back, trend. Just take the trade. Just take the trade, guys. What did oil do? I'm quite thirsty. Anybody take any trades today? Oil didn't. Oh, hold on. Oil didn't do much. I did say oil was going to buy, but, well, it did buy. It did buy. But it didn't buy like how I wanted it to buy. I've seen this pattern a lot. I really feel like oil's about to go back up. Who thinks so? Do y'all think that oil's about to go back up? How did you trade to pass Top Step 100K? Did you have a daily goal? 100%. Yeah, it's going to go up, bro. I didn't pass Top Step 100K. I like quote unquote passed a 50K, but I didn't pass 100K yet. I'm working on my 100K right now, actually. So I'm hoping to get that passed by next week. But the mindset is to took SPX for a short, closed it for a small loss due to no movement. When did you take the SPX trade? The mindset with prop firms is to pass them. That's strictly what they're for. Don't play around. Look, how I treat prop firms is just get through the evaluation, get your money, get withdrawals, fund personal accounts, and keep it moving and buy them. Don't Prop firms, I truly believe, aren't meant for you to hold. It's meant for you to take your money and put it in a personal account and build your personal accounts. I don't trust prop firms that much. I don't trust any prop firm that much because their goal is for you to keep buying it, which means you have to keep losing. You have to keep losing for them to make money. So I'm going to try to extract as much money from these prop firms as I can, get a couple withdrawals, put it in a personal account, and keep it moving. This morning was looking for a pump and dump. No movement. We had some movement on SPX 500. We had a nice sell. At what point did you get confused? I want to know. What time was it when you got confused? Because if I'm waiting for 9:30, it's not until Here. There is a pump and dump. Oh, there's most definitely a pump and dump. That's not the same SPX. On the 15-minute time frame didn't show as much because ACB should be quick trades. Not always. Sometimes it take time. But these like on the 15-minute, yeah, well on the 15-minute, by the time this 9:30 candle closes, it didn't really give you much room. I'm not going to lie. That's why me personally, I stick to like, okay, if I know that I'm on the charts, and that's why I didn't trade SPX today because it was low. It was really low for me, but US 30 was high up. It still was like around this area. So SPX wasn't much of a trade. I can see why. I think that like you still could have gotten some profit, but you see how like you had to make that lower low for this to happen. So the best trade is up here, but by this time, by 9:30, you're all the way down there. So I don't know if it would have been too worth it because my TP would have been Asia's low. That's where my TP would have been. But then, like, when I was looking at US 30, I felt like I had more room because we were up high. So by the time 9:30 closed, we were right here. You see the difference from you being down here to right here? I think you have to be flexible and take what the markets gives us to exactly. And I'm gonna be quite honest with you. I do not go by Stacy's ACB ain't coming back. Some trades come back. I'm sorry. They just do. A lot of them lately for me have been coming back. I have been hitting BE. So I know that things are not going to be for certain. Nobody can tell me anything's for certain in trading because I have to believe what I believe in order for me to be a good trader. Like I have to believe myself. I can't believe other people. So I know that the strategy works, but me, I'm going to take whatever the market's going to give me. If I'm saying that I only want this move from here to here, I'm going to take that move and be done. I went in for profit for a while, then in drawdown on the pullback, so I had to cut it. Yeah, I would have cut it. I would have cut it too. But next time, just look at your options because this one at 9:30 was right here. Then you go to Nas and Nas was right here. Nas was good too on the 15-minute. Nas was a little bit lower, I won't lie, but it felt like it gave you more room here. I don't know why. I don't know if you would have entertained that. Paid the trader. This is the reason you are the teacher and get paid to let one trader and get paid to let one runner. Yeah, to leave one runner. You got to pay yourself. Ooh, I had to learn that the hard way. I had built an account up from 150 to like 800 and lost it, like majority of it. I went from 800 all the way down to like $30. Took that 30, ran it all the way up to like $400. The lesson that I learned from that is that the whole time I'm like, dang, I should have took some money. Dang, I should have took some money. When you take money, it makes you feel better and you're more likely to flip it more. I don't know why, but like I get it, the compounding and all that, but me personally, me just flipping small amounts to big amounts, taking the money, flipping small amounts to big amounts, that's life changing. I don't care what anybody says. It's way less stressful. But this right here, yeah. Had I came on Nas is this is the 9:30 candle close. So I might have entertained this movement here because we did get a pullback back to where we broke out of. So I might have entertained that on a lower time frame. But US 30 was the only one that was up high. Then we had Russell. We had Russell and Russell opened up high. No, it didn't. Russell open here. That's still not bad. Still good range. But look at the the high for Russell. We actually break back in the inside, pump, and coil. I like this trade more than I like this trade. I'm not going to lie. I like this trade a lot more after hours. But we get 3 pushes to the high and then that nice sell, that trap and shift. So after 9:30, which is here, this candle, you still got some good decent size. If you would have put your stop loss up here, which it would have probably been up here, you still maybe would have been in the trade. But SPX, that was the only one that just wasn't like high up on my radar because of it opening here. And I liked US 30 because it opened up high. Like when the indices, when the 9:30 equity hour opened up, it was pumping first, 9:30. And I felt like I had more range back down to the swing low, which was here. So that's why I feel like it's beneficial to have a basket, because then you're like, okay, well, I like this one better because then I feel like I have more range back to the low. TP is New York session low. Yes, sir. So sometimes you'll come to the charts and you'll get high of session to low of session trades. Sometimes you'll come to the charts and you'll get high of day to low of day. Then you'll get high of week to low of week. It just depends. And to be honest with you, I've tried I don't trade the 1 bar stops. I put my stop loss behind actual lows and highs. I keep it very simple, slightly conservative, but I'm more confident. I believe in what I'm doing. But when you believe, like when you try to believe in a strategy and you haven't proven to yourself that it's profitable, it's so hard. It's so hard. Because like it's almost like your body's telling you like, no, no. SPX had 32 handles and could have taken profit 40% of that range and made profit. Yeah. Literally. I don't when I go on the charts, the only thing I don't even have levels marked up. A lot of them. I have it just like how I'm showing y'all. I mark the box. I look and see what's happening at the highs and lows, and I make a decision. I'm trapping traders. I break back in the inside. I'm now coiling at the high, and it's looking to go short. I take the trade, and I TP'd here, and I should have TP'd here. I see. I'm chicken, y'all. I'm trying to hold. Like I put size on my trade, so either way, I'm still making a decent amount from here to here. But I want to be able to hold my trade from here to here. So that's the plan. And that's what I'm trying to execute on my prop firm. Choose phase basket. Mm, 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 mm. You already know. I think I have to become more selective with the pairs in my basket because sometimes I choose the pairs that end up moving slower than their correlation. Are you looking at Forex pairs or are you looking at indices and metals? Because the only pairs that I look at are indices and metals. Like for my prop firm, I'm only for my prop firm, NAS and US 30. That's it. And gold, and gold. NAS, US 30, and gold. Those are the only pairs I'm trading for my prop firm. Phase is your basket only 5 instruments. Basically, US 30, NAS, SPX, gold, and it's one other. It's one other. Oil. Oil. US 30, NAS, SPX, gold, oil. The really good traders, the top dogs only trade 1 pair. You need a basket starting out because you need to get a feel for what you like to look for, right? Because as I keep saying, Stacy lays down a foundation. I'll lay down a foundation, but I can't teach you how to trade a strategy and know how to trade in general. You need to know basic structure. So I would say start off trying to filter out what pairs you like. Do you like certain times, whether you're an Asian session trader, London session, New York session trader? And then once you have your favorite pairs, which is usually always going to be about 2 to 3, then lock in on those 2 or 3. US 30 is my bread and butter. NAS and SPX, that's my secondary. Gold is like, that's like my secret child. That's the stepchild. We don't really like, we're it's a complicated relationship. And then US oil, I just I don't trade US oil enough. Forex and indices. And I would say for Forex pairs, right? I know people are going to not like me saying this. You don't need them. You don't need them. You do not need them. Forex, you don't need it. You get everything from the indices and the metals. That is like, if you're trading New York, it's really only the indices and metals. Come on. You don't really need the Forex pairs. I can't stand Forex pairs. I'm not going to say that because Forex pairs do print the best 3-day setups. I will say that. However, you do not need Forex pairs. If I was you and if I was on this live right now, I would pick 2 pairs that you really like, 2 pairs that you can commit to for your session, whether that's New York, London, or Asian session. Once you commit, tell yourself, what do you want to trade? Trend trades or reversal trades? Maybe you want to look for both buys and sells. That's completely fine. But choose one side. Buys, meaning, sorry, it's either going to be trend trades or it's going to be reversal trades. Choose one side and stick to it. Forex pairs suck sometimes. I'm sorry. The movement I don't really like. But why look at that when I can look at SPX, NAS, US 30, gold, and oil and be guaranteed at least 2 setups a week? At least 2 setups a week. There was a time where I was only trading US 30 the whole week and I was profitable the whole week. Just trading US 30. Get used to a pair. Like, make that pair your baby. That's like your pair that you're going to trade like for the rest of your life and make money off of. You need to create some type of relationship with your pairs. There's got to be like 2 that you really like. Stick to it and study the heck out of it. And you will become a master at your pair. Sometimes I trade Asian pairs due to working in New York. When I can't trade, I focus on pump and dump only. When I was working at Lowe's, I used to be a Lowe's worker. I used to work overnights as a stalker. And man, they used to hate me. I used to be on my phone all the time because I would never have the time when I come home. I'd be sleeping. Because I'd be working like from like 9 p.m. to like 6 a.m. And I'd just be stalking all night, watching videos. Then I'm trading. Soon as like the markets open up around London session, because I'm up, I'm like trading while trying to stock, and I'm making it work, but barely. So kudos to anybody out there that has a 9-to-5 job and is trading with a 9-to-5. That's not easy. That's not easy. What's up, Eric? It's not easy. It's doable. I would say do what I'm doing. Mark your highs, mark your lows. Put limits on it, like alerts. So you know, okay, when it gets here, then I'll look. I'll put an alert here and I'll put an alert here. And then when it gets to this level, I'm like, okay, it's at the low. Am I going to buy or am I going to sell? I'm not going to sell low. That's all you have to do. But this is my bread and butter. Indices and metals. I don't need anything else. It is simple but not easy. Once you get the setup and you see it, then you cannot unsee it. I promise you can't. But the more that you try to go against that and the understanding that you can't skip the process of learning, then the better it will be. You need to fall in love with the process instead of falling in love with the profits. If I knew that, like when I learned from Stacy and Sniper, it taught me that I didn't want to be like them. I want to know what they know. I don't want to be like them. I want to know what they know so I can keep it for myself and nobody can take it away from me. Stop trying to be like your favorite traders. You're not going to trade like them. You're not going to trade like them. You just want to know what they know. That's your job. When you're in a mentorship, you need to pick that mentor's brain relentlessly because you want to know what they know. You don't want them to do it for you, but you want to be able to do it so good to a point where you don't need a mentorship anymore. That's the point, to graduate. You don't apply for college to stay in college, for a professor to basically do stuff for you. You go to college, you learn, and you leave college, and then you implement on your own. But when it comes to money, people get lazy. They get lazy. They want things done for them. They get jealous of other people, and then they start blaming other people for why they're not profitable. But you decided to go on YouTube and look at the video and get confused. I didn't tell you to look at this dang YouTube video. What the heck? You decided this. All right. It's a great teacher whose student becomes better than the teacher. That's what I want. I look at my Discord like a university. I'm not trying to get you to take, basically for me to spoon feed you. I'm doing this for you to take it, teach your kids, teach your family, your loved ones, grow a business, become successful, and teach people that are growing up, that are younger generations, that because they're not getting this literacy from schools. We're starting this. This is just the beginning. I guarantee you this is just the beginning. And the point is to pass this information on because it's knowledge that's irreplaceable and valuable. It's not the money. And that's why people don't see success till this day. Because they worry too much about the profit, bro. Worry about the process. If you're sitting on live trying to pay thousands of dollars to see somebody trade live, what are you going to be doing that for the rest of your life? Like, you just want to be sitting in lives and getting free signals? Like, is that what we're going to do for the rest of our lives? Or are you going to pay for the knowledge and do it yourself? And now you can make money from trading. You can make money from teaching others. You can teach money from starting a business. You can teach money. You have multiple avenues to make money. I'm teaching this because I want somebody to come to me and tell me, I want to be a mentor. I want to help other people out because you've helped me. Now I'm going to help other people. But nobody wants to do that. That was cool saying like that. Hey, thank you. Do somebody use level ring on other pair like Nas or ring on ES so you can predict where the manual TP if they are going to make SMT diversions? That sounds like a bunch of that sounds like something I don't know about. Most of them aren't trading like them. Only your results matter. I've been in many groups, and after a while, they all admit they are discretionary. Only SB style is 100% clear, no guessing. I would not agree with that because everybody learns differently. Everybody learns differently. I don't see SB trading live. I think that if SB traded live, there would be a lot less confused people. But point me to a direction where I literally can see SB teaching people trading live. I only see videos on YouTube. Not saying that he's not legit. I'm just saying that the type of expectations that people have is crazy. There's a mentor that's only even putting out videos. He's only putting out videos, but then people go to these mentorships to try to break down or try to understand what he's saying just for them to leave a mentorship because they don't have proof that that mentor is trading it. But then they'll go right back to a Stacy Burke live. not live, but a Stacey Burke video and preach, 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 preach. But everything, you can say everything's discretionary. Everything's discretionary. Nobody will really like believe it until they do it themselves. Real talk. And that's why people search. But you will never actually believe in a strategy until you do it yourself and prove it to yourself. Because even if somebody else does it, that doesn't mean that you believe that you can do it. That's like, somebody passing a test and then, oh, I can pass this test. Life is discretionary and a choice. Yeah, he does not teach live anywhere. That's different between real traders and the fake traders. You need to pave your own process. I'm saying, and it's simple. Like you can see the fake gurus on YouTube. It's very evident. But just going, I will say this as far as mentors. When you go to a mentorship and you get mad because they don't trade live or they don't show their profits, that is a terrible way to judge a mentor. Straight up. That's a terrible way to judge a mentor. Not only because, okay, I understand y'all want to see like establish the trust and stuff, which is kind of why I trade live, because I want to establish trust. But you have people literally hopping from mentorship to mentorship to mentorship, judging mentors because they won't put themselves in an uncomfortable position for somebody else. It's terrible. It's terrible. And I feel like that's why some people gatekeep. It's like it's error on both sides if you really want to think about it. But I think that the best way to go about this, especially me, because it's hard being in an industry where people like it's involving money and people want you to like prove yourself all the time. And if you're not making money and showing large amounts of money, then they don't believe that you're a good trader. I just feel like that's such a retail trader way to think. I could literally just be going on YouTube and sharing my process. We see people grow up on YouTube all the time. Well, if you pay, you are the customer and shall see the real deal. A lot of strategies work on YouTube, but people don't work on themselves. That's the problem. I've paid multiple mentors, and Q it's only one that actually provided any knowledge worth keeping. All the rest just give you a few videos expected you to learn it. I appreciate that, Eric. Put a poster, a lamp in the back. Hey, chill, chill, chill. Don't mind me. I'm stuck in the living room because my kids take over my house. But that's my goal, y'all. Like, oh man, I wish I can help out every single person. And to be honest, like I try to do anything. That's why I started the like giveaways. Like on my Discord, I'm doing giveaway 50K accounts every 2 weeks. I try to find different ways to help people, to get people to understand that I'm not no different than you. The only difference is that I have an actual step-by-step process and I've found my way of trading, not anybody else's. I don't trade like Stacey Burke. I don't trade like Sniper. I have taken bits and pieces from different mentorships and I've created and gained enough experience, mind you, 7 years. 7 years of doing this. And I've gained enough experience to understand market structure and a strategy. And I've taken what has resonated with me and applied it to my trading. And that's literally it. So, like, recently I just had somebody tell me, well, I don't really find your lives like helpful because you don't show you don't tell people where to enter and that you focus too much on mindset and structure. I said, what? What do you mean? What do you mean? Like literally live time, I'm doing this. I only have like simple levels up here and I'm flipping through charts and I'm literally just guiding people through every single instrument. They tell me to look at an instrument, I look at the instrument. I tell them my thought process. I tell them whether I would buy or sell and they still don't find it good enough. I drop signals and when those signals don't hit, then they're like, "Oh, there's just not enough for me to. My Discord has only been live for 4 months. Crazy to me, which I like still to this day, guys. I don't even know how I'm doing this. I'm such an introvert. Um, Hi Q, may you explain the connection between 200 EMA and the pumps and dumps? Yes, I will. The only trading mentors I have gotten only value from are Stacy Burke, his friend Steven, and Q and Sniper. Q, you explain it very well. I appreciate you guys so much. I really do. Um, the reason why I use the 20 EMA is because I really like this 800 EMA. I'm a hide it, but I'm gonna work with that. I'm gonna see what's going on there with that 800 EMA. I just like to try new things. But with the 200 EMA, it gives me an idea when I'm on the lower time frame. It basically just keeps me in check and like, hey, I know what the higher time frame's doing by looking at this EMA. So I know that if I'm in a pump and dump scenario, like let me show you here. Let me show you signal, right? Da 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 da. Okay, let's go to the 3 minute on this day. 3 minute. All right. I know that breaking out, I'm going to get some type of pullback, right? So sometimes, like when we're making structure inside that 20 EMA, after like we false break, because I know it's going to pull back and create higher time frame structure, it'll usually pull back to that 200 EMA. So it's not really like I don't use it all the time. It's just more of confluence for me. Just like how when I pointed out, like when it's breaking like higher time frame highs and lows, it'll pull back to that 200 EMA. Same thing that it did here, pull back. Same thing that it did. Let's see. Here it pulled back to the 200 EMA. This is just chop though. Here we broke out and pulled back to the 200 EMA. Here, once we broke out, we pulled back to that 200 EMA. It's like a pullback zone for me. I look for pullbacks there. I guess that's just to keep it simply put. Once we break out in an expansion leg and we're super extended away from that 200 EMA and that 20, I'll usually look for the pump into that 20 to go in the direction here, lower low, and then we pump through that 20 EMA to the 200. I don't know where it at. You know the EMAs move as it settles. I don't know where it was at before or if we had broken out, but that's where I'll usually look. I'll look at it as far as pullback zones. Like if it wants to stay in that true direction, it's not going to break the 200 EMA until it starts shifting and breaking highs. Now we're pulling back into the 200 EMA, pull back to the 200 EMA. So I just use it for that. It's not super important. I'm still kind of experimenting with it because like I said, I had noticed that Stacy was using a bunch of EMAs and I was like, I was trying to understand it before, but now I understand that it's not needed. It's really not needed, the EMAs. A lot of people just want to be spoon fed, very much so. And this Eric is a guy that has literally put blood, sweat, and tears in his field. So if I was him, I'd be feeling a little disrespected. Like, golly, it's like certain tiers of traders. You got traders that have no problem taking the risk and like, putting in that work. That's how they get there. That's why I'm not even worried about you, Eric. A lot of the people up here I'm not worried about. Like, it's you like literally like putting yourself in the flames. You have to. That's the only way you'll learn. You got to get burnt enough times to not do it no more. Can anyone be a part of the Discord? Is there a charge? I have a free section and I have a section where it's VIP, and in the VIP that's where you get to go live with me. So Tuesdays and Thursdays I'm going to go live London session, and then Wednesdays and Fridays I'm going live for New York. I've just kind of split it up because like half my audience is London and half my audience is New York. So yes, there's a free side. I'm going to put my Discord link in here. Let me put my Discord link in here. You can definitely join the general chat. And if you're I pinned the 3-day free trial. So if you just wanted to give it a shot, if it's something that you like, you can do the 3-day free trial for my Discord, my VIP section. And I pinned that link. It should be pinned in the chat. But yes, sir. That's the you can join the Discord there. I jumped from plane and now I am building parachute while I'm heading down. Hey, I like that. That's why I reject the 90% failure rate. Not that many people truly went through the fire. Blowing an account isn't a true effort. I'm telling you. I'm saying, like, if you ask me, and I'm being completely honest with y'all, I have not blown that many accounts. I just haven't. Like, I don't know how so many people can blow it so many times, but me, if I'm blowing an account, it's a slow blow. It's not a quick blow. So I'm not gambling, but I like during the process where I wasn't understanding, I would slowly blow my account. I don't understand how people blow their account within the span of a week. That's what I don't understand. Everything worth having takes time. Ain't that the truth? Ain't a lot of people don't want to hear the mindset stuff. That be the key where it's at. It's some people that'll hesitate right here, and it's other people that'll pull the trigger. And that's really what it comes down to. It's some people that'll hesitate right here, and it's other people that'll pull the trigger. We don't know what's going to happen after we pull the trigger, but the point is take the trade so you can gain the emotional and the skill. But you need to gain both to be on your own, to go on your own at least. I already pulled the trigger long. Hey yo. Nice trade there. Now I see a coil. We doing a bunch of whipsawing inside of this swing high and swing low. We just been chopping it up, going sideways. I wonder what this day is going to close as. Let's go to the 15-minute. We're still really up high. Very much up high. On the trap and shift, would you wait for a pullback to enter? Yes. So you're saying, like, if we were trapping at a level and then we just go vertical down and we trap up and then we get the pullback, and then you're asking, would I wait for this? I would. There was times that I'd enter here, but I'm safer here because that's the pattern. It'll trap, and this is the shift. So yes, just like how I did here, like it was going up and we were making higher lows, and then I had seen that it had gotten to the high, and then I know that when we trigger breakout traders, that's usually the time where we'll trap them up high. So we're trapping buyers above the breakout level for the shift, and I'm getting in at the shift, the pullback. It's just like Steven's trade. You ever look at Steven's post and you see something like this? That's all that is. So yes, I would wait for the conservative entry, as he would say, the conservative entry. This is like high risk because you're technically picking a top. But if I'm seeing a coil above the breakout level after we've triggered the high, broken down, broke this structure, pulled back, now this is becoming resistance. Now we get an engulfing candle. We're coiling below the EMA now. I'm selling. Trap and shift. So yes, sir. I would just get used to that. Just like looking at this, right? Before London session, we had this high and this low. And it depends on what you're looking for, right? Because there's a nail and bail here, and then there's a buy setup, right? This is my swing low. This is my swing high. Am I doing anything in the inside of here? No, I'm not doing anything. Steven has a page? Yes, he has a page. Steven has a page for sure. Does anybody have Steven's page? Can you drop it? He posts all the time. Well, I wouldn't say all the time now, but he doesn't really drop any videos. It's just posts of pictures, but every single picture is going to look like the trap and shift, which is crazy. Steven doesn't even use levels. He doesn't even have levels marked on his chart. He's literally just looking at a trap and shift, the pattern. That's all Steven trades. Crazy, right? I mean, he does go off of levels, but he's not going off signals. He doesn't follow the signals. I mean, Stacy Steven. He's not following signals. He's looking for a high, a trap, a shift, a down low. He's looking for a trap and shift, and that's all he's looking for. But look at this though. If I know that I'm trading in London session, obviously I know that this is my higher high, and we're going to dump to pump. We're going to pull back to trend. So this is my breakout level right here. Now, what do I need to see in order for me to go higher? If I'm going lower and I'm chopping down in the inside, mind you, this is the high, this is the low, this is the breakout level. Look what we're doing underneath the breakout level. We're trapping sellers. We hit the low and pin hammer at the beginning of a 15-minute rotation and end of a 15-minute rotation. Pin hammer from the swing low. Take the trade. If you're not getting in here, guess what? I'm getting in here from the retest. If I'm not getting in here, I'm getting in here from the retest. And that's all I'm doing. That's it.